Hello traders, and welcome back to Explain the Charts. Today, we're taking a deep dive into the S&P 500 index, represented by the SPY ticker, to break down current events impacting the market and analyze the chart data for insightful trading opportunities. The S&P 500 is a broad-based market index tracking the performance of 500 large-cap U.S. companies, providing a comprehensive view of the overall U.S. stock market. As we begin our analysis, let's first address the news headlines surrounding the S&P 500. Recent reports suggest a mixed outlook for the market, with some analysts predicting volatility and potential swings. MarketWatch highlighted that the S&P 500 index opened at 5,612.74, with a day range of 5,581.79 to 5,651.37. Barron's reported that Dow, S&P 500, and Nasdaq futures were falling in pre-market trading on Tuesday as stock markets reopened after the Labor Day holiday. The news also emphasizes the importance of economic data releases this week, which could influence the Federal Reserve's decision on monetary policy easing. Traders are closely watching these developments as they could significantly impact the direction of the market. Now, let's transition to our chart analysis and see what the data reveals about the potential trajectory of SPY. Let's start with the daily chart for SPY, encompassing a broader perspective of price movement over time. Observing the past few months, we can identify a clear uptrend with higher highs and higher lows. This suggests that the market has been experiencing sustained bullish momentum. However, we see that the last few candles indicate a potential slowdown in the uptrend, with prices consolidating near the current resistance level. This could be an indication of a potential shift in momentum, as the market may be taking a breather before making a decisive move. It's essential to keep an eye on the key price levels here, particularly the support and resistance levels that could dictate the future direction of the index. Zooming into the last few weeks of candles, we notice that SPY has been trading within a relatively narrow range. This consolidative behavior could be a prelude to a breakout either to the upside or the downside. The direction of the breakout will likely be influenced by the upcoming economic data releases and the Federal Reserve's policy decisions. Let's shift our focus to the 1-hour chart for SPY, providing a more granular view of price action. Here, we can see that the candles have been forming a series of higher highs and higher lows, indicative of a bullish trend. However, there seems to be some hesitation at the current price level, with candles exhibiting smaller bodies and longer wicks. This could be a sign of indecision in the market. Looking at the volume, we can observe that it has been declining slightly in recent hours. This could be an indication of a potential slowdown in momentum. Overall, the 1-hour chart suggests that the market may be approaching a critical point. A break above the current resistance level could confirm a continuation of the bullish trend. Conversely, a break below the support level could signal a bearish reversal. Now, let's drill down even further and examine the 15-minute chart for SPY, offering the most detailed insights into short-term price movements. The 15-minute chart provides a real-time snapshot of the market's behavior, allowing us to identify potential entry and exit points. Here, we observe that SPY has been exhibiting a series of smaller candles, suggesting that the market is experiencing low volatility. This suggests that traders may be cautious and waiting for a clearer signal before making any significant moves. The volume is also relatively low on this time frame, further reinforcing the idea of indecision in the market. It's crucial to note that the 15-minute chart is highly susceptible to rapid changes in sentiment and can be influenced by news events and economic data releases. While this time frame can provide valuable insights for short-term trading, it's essential to be aware of its inherent volatility and the need for quick decision-making. Therefore, it's always advisable to use the 15-minute chart in conjunction with the longer-term charts for a more comprehensive understanding of the market. To gain further clarity on the market's direction, let's revisit the daily chart. Focusing on the last few weeks of candles, we can see a clear pattern of price consolidation within a range. This suggests that the market is in a state of equilibrium, with bulls and bears vying for control. The upper boundary of this range represents a crucial resistance level. A break above this level would signal a continuation of the bullish trend. Conversely, a break below the lower boundary of the range would indicate a bearish reversal. It's essential to observe the volume during these price movements. Increased volume during a breakout would suggest strong conviction and a more sustained move in the direction of the break. Conversely, low volume during a breakout could indicate a weaker move that may be short-lived. It's crucial to keep an eye on the news and economic data releases, as they could influence the market's behavior and potentially trigger a breakout from this consolidative range. Let's examine the 1-hour chart, focusing on the last 24 hours. Here, we can see that SPY has been consolidating around the current price level. The candles are exhibiting smaller bodies and longer wicks, suggesting indecision in the market. The volume has also been declining in recent hours, indicating a potential slowdown in momentum. This consolidation phase could be a prelude to a breakout either to the upside or the downside. A break above the current resistance level would signal a continuation of the bullish trend. Conversely, a break below the support level would suggest a bearish reversal. It's important to consider the potential impact of the upcoming economic data releases. A positive economic report could fuel bullish sentiment and drive prices higher. Conversely, a negative report could trigger a sell-off and push prices lower. Let's recap the key price levels to watch in the SPY chart. On the daily chart, the support level around 5,500 and the resistance level around 5,650 are crucial. A break above 5,650 would signal a strong bullish continuation, while a break below 5,500 could trigger a bearish reversal. On the 1-hour chart, the immediate support level is at 5,580, and the resistance level is at 5,620. A break above 5,620 would confirm a bullish uptrend, while a break below 5,580 could suggest a bearish correction. Keep a close eye on the volume, as increased volume during a breakout could indicate strong conviction. It's important to note that the market is highly dynamic and subject to constant changes based on various factors. Therefore, it's essential to stay informed about news events and economic data releases, as they can significantly influence the market's direction. Always remember to manage your risk effectively and employ a sound trading strategy to navigate the complexities of the market. With a comprehensive understanding of the charts and the news, you'll be well equipped to make informed trading decisions. Thank you for joining us on Explain the Charts. Remember to like, subscribe, and turn on notifications for more in-depth market analysis and valuable trading insights. Until next time, happy trading!